February seasonal pattern since 1950s calls for profit taking. Guys, the 10-year yield is creeping up, and I've been telling you this. As long as the 10-year yield goes above 4.5%, you must expect profit taking to come very, very soon. All right, with that itself, disclaimer apply as usual. Now you can see that the 10-year yield is moving up very nicely on the side of the market. And of course, you can see this is not a good sign. See, there's a bottoming out right here at 4.4%, and it's crept past above the technical level of 4.5. And most likely, in my opinion, going to test the 4.65%, 4.65. And of course, if that actually happened, we do expect the stock market to take some profit off the table. And of course, we all know that the US debt at the moment right now is ridiculous at $35.4 trillion, and it's continual amount. And there's a problem here. How are they going to pay for the interest alone? So with all this information, we know that the stock market may be near a top area. And of course, we notice that the consumer credit outstanding is really getting ridiculous. You can see that it's way, way high. As a matter of fact, it has shot up incredibly over the last few months. And this is exactly what happened back in 2020 when everybody was just spending because of the free monies available. But now we have some problem here. We don't have that. So now this is not going to be good because we have seen before that when this thing happened, you can see that the asset managers now they're offloading some position in the market. As you can see, that back in 2013 when they offload itself, there was some pullback here. The one that was a major one is in 2020. That was where the market sold off due to the pandemic. And of course, in 2022, somewhere around here, that was a bigger one. So what we're looking at now is that there seems to be some artificial holding up in the market. So if this thing goes below the so-called technical point, I do expect a drop of at least 5% from the market where we are right now. So of course, this is not just only these numbers, but we do note that the S&P 500 right now is really at a very strong trend, whereby every time it hits the moving average here, it always rebound. All right, so this time around, I do suspect that you come down again to test. But because it's one thing to take note, the market has been holding up for a while, right? So last few months, I think that this time around, it will test the very important neckline somewhere around here. So my call is 56.80 will be a good time to buy heavily in the market because I still believe the market will go out eventually under Donald Trump. But a pullback will be good, and that's why probably the reason why the fund managers are taking some profit off the table. And of course, you can see at the moment right now, the main revenue resources come from the Magnificent Seven. And of course, we do know that the video is still having a bit of issue at the moment right now. So it's leading about 56% of the non-US revenue. So in my opinion itself, this will likely drag the market down. And of course, when gold price had to creep up too fast, that is an issue. Now, recently, gold price have been going up very, very fast. And every time when gold price goes up, you can see that the stock market takes some profit. So we have seen it before. Every time when gold price goes up again, the stock market takes some profit. So now gold has been escalating at a very fast speed. I suspect that this is where the stock market will take a dive very soon. So all this information tells me that I need to be very careful for the next few days because the seasonal pattern has proven that the first 15 days of the month, we do have a bit of upside on the S&P since 1950s, all right? This has been ongoing since 1950, but thing is that the last 15 days, we usually see some profit taking, or in fact, last 13 days, because February has about 28 to 29 days, right? And if you look at it on the broader scale, you can see that this is a seasonal pattern. So today is the 12th of February. So we're looking at probably next few days, we have a market peak somehow, and then there should be some profit taking. So if you look at the NASDAQ right now, I basically believe that the NASDAQ will have some profit taking soon because the boys on my crazy indicator telling me that there's some selling in the market. The last time we see something like this, the KSI was red and the market sold off. So I suspect that this time around, we're going to see the first profit taking to 21,347 for the NASDAQ. And of course, if the selling goes a bit more, if the 10-year yield goes beyond 4.65%, then we can see this number here is 28,867. So guys, watch out for the NASDAQ. I believe that this will be the one they're going to be selling a little bit more and faster compared to the Dow Jones. But one thing to note, if you look at this chart here, it's quite interesting. It does tell us that right after the selling in the February wave, the market usually bottom out in the early part of March. It will be a turbulent month. Then after that, April is where things takes off. And I think that this will likely happen in the next few months. So traders, you need to take this chart and take note of this. This may actually really happen for all. All right, with that, again, I wish you all the best. This is Kel signing off. Take care and like and subscribe my channel. Bye-bye.